What is going on, guys? Camilo here. Hope you are well. So before we dive into this video, I want to let you guys know that on Sunday, 8:30 Eastern Standard Time, this Sunday, okay, I will be going live for the first time on my YouTube channel, where I will review charts using Elliott wave analysis. Okay, so come on and join us and throw out your chart requests and let's dive in together. I'll answer any questions you guys may have, and this will also serve as a tool for educational content, so you guys can see how we analyze our charts and how we can take advantage of it using the Elliott wave principle. Also, don't forget to subscribe and smash that like button, and I really appreciate that. So thank you. So the markets here, man, I mean, come on, the Qs, the SPY, the Dow, everyone has been sort of consolidating and rolling over, if you will, okay, from the all-time highs. And the way we're looking at this, guys, is that we are still within that objective. We're still projecting to pull back in towards the wave 4. We broke the levels today. We broke the 22 to 23.6% retracement level at 358.79, the one that we outlined yesterday as our first zone of defense. But the bulls failed to hold it, and now it appears that we are heading on lower. Now our next level of defense is the 38.2% retracement, which is right around the 354.78 region. All right, so if you have, if you are wondering where this tool is coming from, we take a retracement from the low of wave 2 to the high wave 3, and you get the fib levels, which is how you measure the potential and theoretical pullback for where wave 4 should terminate. Okay, and the common levels are the 23.6, 38.2, and even the 50.0, the 50% retracement. so far it's looking like we are heading towards the 38.2. All right, so it's fine. I mean, we can't expect for the markets to continue on higher. I know that this week was pretty tough for a lot of us. I was myself, I'm still holding my long-term plays. I'm still holding some plays there that are taking a little bit of a beat, but you have to be patient and you have to stay objective into what your goal is. Okay, trying to catch the bottom and trying to catch these tops is not going to help. You're going to get blown out and potentially checking out of the market. So I do encourage you guys to exercise patience and just follow the trend. Understand that if you're trying to short this bull market, you're going to get obliterated. All right, I know that there's a lot of scares of inflation fears and all. That's the media speaking right now. All right, I mean, I could point out, I mean, that's probably a video in of it on its own, but I can point out in the chart where the initial fears of inflation, right, after the Fed meeting in June, the market started rolling over, but then boom, we ripped up. And so right now it's similar situation. So it's just market psychology. Be careful with that, all right? And do stay patient. So as I mentioned before, we're still looking for this wave 4 pullback at these levels, all right? So if I want to quickly review this with you, so coming off from from the June 3rd low, we go up in 1, down in 2, 38.2% retracement support, 5 waves up into the wave 3, found resistance at the 1618, made new highs, and now we're selling off. The way I'm viewing this, guys, if I take you down to the 15-minute time frame, the 15-minute time frame is suggesting me that perhaps we are within an A, B, and C formation in a corrective structure. All right, so our downside targets are going to be, well, as you can see here, we very well surpassed the 1618. So this is unusual. At this point, it's unusual for this magnitude, for this projection of the C wave to go further down. But I was thinking that this cluster here of fib levels was holding a support. For this very reason is why I'm still on the sidelines. All right, I want to see a little bit more clarity. I want to see this levels hold. Okay, you see here that there's potential support at the 357.22. As it held here, it held back here, and there is some clustering here of that price structure, price levels. All right, but as I said before, the 38.2% retracement is our next level of support. All right, taking over to the SPY. The SPY is, let me take you up to the 1 hour time frame. This trend line always goes, let me just zoom out. All right, here we go. Apologies. So From the May the 18th low, right, when we bottomed down in the wave 2 in the minor degree, went up in 1, down in 2, up in 3, and now down in 4. You are now noticing a break below this trend line. Okay, we broke below it here. Okay, we gapped down and broke below it, but found support and head on higher. Now, is this the same thing? Is this where we are getting shaken out, and then the bears are going to come and start shorting this market? I don't think so. I think this is still a pretty much shakeout or fake out to the downside, and the bulls might get tricked. But you know, if you're strong and you have conviction in your analysis and you have good risk management, then this shouldn't really be affecting you so much. And just what works in your favor is being patient. So that's what we're exercising here at Trending Waves, and thus far it's been working. So our objective here was to hold a 23.6% retracement support. All right, again, this level is taken from the lower wave 2 to the high wave 3, and you get these two fib levels. Now the 100% extension was surpassed, overshot by the third wave. Okay, and now we've established major resistance at 437 spot 91. Trendline support was broken. We may just go down further, all right, to retest the zone here of support before we head on higher. Okay, at this point is where I'm going to anticipate that once we make this final move, we get retest of this trend line. A lot of people are going to start shorting, okay, and buying puts and whatnot, hoping that this goes down. But we're gonna see we're most likely gonna see a squeeze to the top, to the new highs. All right, so be careful. Let the market do its thing. Don't rush into any trades. Wait for confirmation. Now, if we do fail to hold that level of support, oh, sorry, give me a second. If we do fail to break above the trend line, if it becomes resistance, I mean, you saw it here, right? You saw it here become not even did not even become resistance. We just blew past it, held it as support, and then just went off to the races. Here's a little bit different, all right? If we take a look at our indicators, you notice here that we bottomed, all right? So it's kind of like the same deal, all right? The RSI was making a divergence to a positive divergence. If you see here, you made a low on June the 18th, while the markets itself, the candles were making the low, right? And then another low, a new low on the market, while the RSI was making a new high. So that's a divergence, a bullish divergence, okay, in strength, and we went on higher. So maybe that's what we should be also looking for. All right, we're making a new low. We want to wait for the bottom here. We want to wait for the market to probably bounce, head on lower a little bit, and the RSI to start making a new high, okay, a new lower high. So keep an eye out for that. The MACD is also concerning me, as we've already crossed the moving averages, and the histogram is ticking lower. All right, guys. So be concerned a little bit, but don't be too worried. Don't rush into trading to the downside. Just be patient. Wait for clarity. Wait for confirmation. All right. Confirmation is the potential retest of this trend line or the support levels here at the 38.2% retracement. All right, guys. So again, I'm gonna remind you that on Sunday I will go live on YouTube, and I will review the SPY, the Qs, the Dow Jones, any names that you guys also have questions on. And you know, let's just have fun with it. All right, subscribe to the channel, hit the thumbs up button, and yeah, shall see you guys on Sunday. Take good care of yourselves and have a great weekend. Bye bye.